All right, welcome. Good afternoon, everybody. I am Jane Galena, also known as Airplane Jane. I am a licensed pilot and worked in aviation for a little while, but I'll give you guys a little bit more about me coming up. So, legal disclaimer, everything that you guys are going to see here is for educational purposes. All of the ideas that I do mention to you, I highly recommend you paper trade for at least 6 weeks to prove to yourself as an experienced trader or as a new trader that you are able to go ahead and profit off of it. I'm sure that many of the experienced traders will go ahead and say, yes, learning a new strategy, go ahead and do it on paper first. Give yourself that confidence that you can go ahead and you can create profits from the new strategy. And when you do start trading with real money, know that there are varying degrees of risk in all securities instruments, and no past performance is indicative of future performance. All right, now that that's out of the way, here's myself, where you can find me. I'm on Twitter, I'm on Instagram, YouTube. I do a Monday and Friday 1 p.m. live stream market analysis, and on Sundays roughly 1:30 I build my watch list going into Monday, and always happy to answer questions live as well. And I'm also on Facebook. I do have my website, cjntrade.com, and I'm also on Ticker Talker. And if you guys, much like David, who is just on, if you guys have any questions, I am accessible. Just go ahead and shoot me an email, jane@cjntrade.com, and I'll get back to it as quickly as possible. I do have 2 kids. We are home still in quarantine up here in Canada. So if they make noise while we're doing the presentation, I do apologize for that. But I tend to respond back to emails in the evening if you do email me, just so you know. And how I came to trading. So originally, my parents were value investors, that they were there sitting at the breakfast table, and they were reading the Wall Street Journal. It get delivered every single morning, and I was a curious little kid. So I said, hey, Mom, Dad, what's this PE ratio? What's this high? What's this low? And I slowly started to learn about value investing with the Wall Street Journal at the breakfast table. Then I went to college in Memphis, and being from Washington, D.C., I thought, hey, you know what? I want to go ahead and I want to look for another job in Atlanta, because I was from a big city, wanted to be in a bigger city, moved to Atlanta, and started working at Solomon Smith Barney, where I got my Series 7. So I was a registered broker at that time, or I was an assistant to 4 different brokers. And I was there and I was helping them, and I had the opportunity to take over a broker who'd been in the business for 25 years, to take over his book of clients. And then we saw devastation happen with WorldCom, or I should say with the dot-com bubble. And they had the WorldCom options in our office. And I saw the people that monitored the WorldCom options for these clients had to call them and say, hey, you owe us money. Unfortunately, the stock dropped. They'd taken money out on margin without exercising their options. Some of them lost their homes. They lost their kids' college funds. They were losing the shirts off their back. And that was a lesson to me. Hey, you know what? I don't really want to deal with other people's money. So I took my first layoff of my life, and I went to culinary school in Europe. I had an amazing summer, came back, and then worked in restaurants, real estate, aviation. Found myself immigrating to Canada, where I'd met my husband in Philadelphia, and then immigrated to Canada, and ended up that we got married. I was pregnant, and again, another layoff in my life. So if there's anybody going through layoffs, sometimes they can be the best blessings. It can be hard at that time, but they can definitely be a blessing in disguise. And that's what brought me back to the day trading world. I was pregnant, 8 months pregnant, reduction of workforce, and I ended up turning to day trading as my profession, and absolutely love it. So I started off, probably like many new traders, I was scalping, and I got sucked in by the low float running stocks. And I thought, you know what, this is really risky, right? Because you want to mitigate your risk as a trader, number one. And the low float running stocks are great when they go with you, but horrible when it goes against you. So I ended up trading more large cap stocks and looking at the intraday gapping stocks. And then I even saw, you know what? It's amazing. You can make even more money on the overnight gap sometimes with swing trading instead of intraday, because that intraday tends to be more driven by the retail traders and algorithms, and it keeps it pretty much in a narrow range for the day. Some stocks, Amazon, Tesla, they can have amazing ranges throughout the day. Like Tesla's up $49 today. So you can have some amazing moves in a day, but on average, you don't have that many. And I saw that the profitability with swing trading could be much better when you follow the trends. So for me, my next question for you guys, and I want you guys to answer. I don't know if I'm able to see the questions, but do you guys believe that the market is manipulated? Yes or no? Well, President Trump sure does. May 13th, he said, hey, so when the so-called rich guys speak negatively about the market, you must always remember that some are betting big against it and make a lot of money if it goes down. And, here, I got the chat now. Okay, and when that goes positive, they get big publicity and make it go up. They get you both ways. Is that barely legal? And Jim Cramer. I've never seen so many games played with stocks. And these are both recently. So we have May 13th and June 9th, not long ago. Well, we want to keep it simple, right? That's what this is all about. KISS swing trading strategy. Keep it simple, stupid, right? Try not to think when trading. Don't put your emotions into it. Look at the chart, trade it technically. And we even do it with the dark pool prints. And you might be wondering what dark pools are. I will go ahead and explain that to you. So it's pretty easy, right? It's a 1, 2, 3, 4. Really 1, 2, 3. 4 is just that patience of executing the targets and locking those profits. So you wait for the dark pool print. You lay out the trading plan, wait for that low risk entry, and execute and follow for the targets, right? And of course, it seems super, super simple, but I'll try to help explain it for you guys so you can understand better how we have, I say we because I do work also with Stephanie Cameron at thedarkpools.com. So if you guys want to learn more about it, I will put it in here. Oops. And we teach people all about trading around the dark pool. So what is the dark pool, right? Well, originally they were set up as the dark pools of liquidity back in the 80s. Once NASDAQ came around, it was really where these really big guys wanted to go ahead and place their massive orders. I mean, we're talking 1 million, 2 million, 3 million, 5 million. We just saw 12 million share print on Thursday and then on Friday with PCG. So it's where these massive orders, not just a little retail trader that might want to sell or buy 10,000 shares or anything like that. We're talking super large orders. And the reason why it was originally developed was for these large traders, hedge funds, institutions, where they could go ahead and they could put their order in. They were going to get a better fill, because if you saw such a large order on level 2, it would likely never reach that price. So if you saw, say you're looking at Tesla and you wanted to buy it at 980, and you're this really big institution or hedge fund, and you put in your order for 250,000 shares. Well, if somebody sees that on the book, people are going to go ahead and use that as support, and they would buy it before it ever got there. So they hide these orders. And sometimes you'll hear people saying, oh, well, you don't get to see all of the volume in the market. Part of that is true, because some of these orders are also reported a day later. So with these large blocks of trades, right, we see the prints happen, but it was really to set it up so they could get lower commissions and a better fill. Because if Again, you saw that order on level 2, it would likely never get filled, whether it was a sell or a buy to completion for a long period of time. So they used to, run the orders through Floor Trader and just go with a volume weighted average price. They would split it up into different 200,000 share lots, or they would sell small amounts until it was finally filled. So this gave them the ability to go ahead and try to get that order completely filled before there was a major move on the stock. And how did I really come about this? Well, I came about it when I wrote my first book, FMJ, Trust, Transition, and Trade. And it was released back in 2017. And that's when I met Stephanie Kammerman. She's known as a stock whisperer. And I interviewed women for my book. It's much like Market Wizards. And it's all about their trading experience, how they came to be successful traders, different backgrounds, different time in the market from 5 months to 25 years. And Stephanie really piqued my interest about the dark pools. And I thought, hey, this is amazing. How can you trade with this edge of knowing what the really big guys, the hedge fund people are doing, and just capitalize right off of that, just piggyback on them. The one time you want to follow something in the market is following the dark pool prints, following a guru's spurt about what could potentially happen, or following an upgrade and downgrade. Usually not a very successful pattern. But when you follow the dark pool prints, you can have success over and over again. So again, it's these really big guys, that hedge fund managers like Warren Buffett, Ray Dalio, Bill Ackman. These are the type of people that are laying those large positions in the market. You can also have insiders from a company. They might not directly trade their own stock, but they could trade an ETF that has that stock in it, such as maybe there's something that would say be happening to 5G stocks, and you might see it in XLC and communications. Maybe it's a Verizon, or maybe it's AT&T, and it's in the XLC ETF. So then you might say, all right, well, let me go and look and see what's going on, right? What are the holdings in this large ETF that we've seen a massive print? And as a result, it ends up that, yes, later news might come out. Like we saw the massive print on PCG, news just came out. They just raised money to be leaving bankruptcy by selling shares of the stock at an offering at $9.50. So we see the prints first, the news, and will always come afterwards, as well as the news reporting, right? They're reporting what has already happened. We see the prints before this massive move has happened. So you might say, Jane, that's great, but what's a print, right? I tried to explain this to my parents, and that's how this came around. So we have the big whale, the big hedge fund manager. When the transaction's complete of all of the shares being recorded, that's when we see the print. So you always have one big hedge fund person. In this scenario, it's buying, right? And they're buying 1 million shares of Disney at $100. And then you have all these little guppies or krill or little fish of the sea, the retail traders, right? And they happen to be selling to this big whale that's in the market. And then all of a sudden they sell, and guess what? Maybe there was a downgrade on Disney, or there was news coming out, because if somebody wants to buy 1 million shares, what do they have to do? They have to make you think that it's time to unload the stock. We've seen numerous examples as well of the dark pool and headlines on Barron's, news reports on CNBC, Fox Business News. This is over. This market is dying. This is an awful time to invest. Or this market cannot stop. It's going to continue going up. This is amazing. And next thing you know, it's the reverse that's happening in the market. Why? Because the big guys have gone ahead and they've capitalized on the headlines. On people selling, they buy. On people buying, they sell. And they do the exact opposite to the market. So it's a bit of a psychological game. And I'm sure if anybody's been trading for a while, you see that happen. You see that there's certain times in the market where all of a sudden, hey, when everybody's saying this market's going amazing, there's total euphoria in the market, that next thing you know, whoop, that's when we start to pull back. So why do we track the dark pools? We want to see where the big guys are laying their position. So we wait for these prints, right? And then we're going to follow the direction of the big institutional traders. We try to keep it simple, right? That's what I was talking about. Keep it simple. Wait for the dark pool print, right? These guys are not looking for a 5, 10, 15 cent move. They're going to be looking for a couple dollars. If it's, you know, Tesla, Amazon, sometimes Facebook, Apple, we're looking for 10, 15, $20 moves. So depending on the stock, depending on the size of the print, it can affect the potential move that we have coming. Now, right now in the market, we're coming up just before earnings season, and this is the time when we start to see lots and lots of dark pool prints. We don't necessarily know which way that they're going to go ahead and take the market, but we know that there's going to be a massive move. So we go ahead and we're patient, all right? And I'm going to break one trade down for you that happened just a couple weeks ago to go ahead and give you guys the idea of what could happen. But we see these prints unfold every single day. We're sitting there and we see the prints coming in, and all of a sudden, aha, okay, yes, all right, we see prints. Sometimes we see prints on fear. Sometimes we see prints on the SPY. Sometimes we see prints on gold. Sometimes we see them on PCG, on a utilities company. So we see them across the board. However, they're usually on New York Stock Exchange or NASDAQ stocks. Occasionally, we will see them on OTC stocks, but we don't see them that much, and we also don't pay attention to those that much. When they're foreign stock, we just sort of let it go, but we do pay attention for sure. And we look, hey, okay, that's interesting. Well, we just got a weird print on Japan. Maybe, you know, maybe something's going to happen on a Japan stock or something like that. So we do see things that raise our radar to the fact that it could be a big move coming for an entire sector, or, you know, like Brazil. We saw that Brazil was getting big prints. They're now the hot spot for coronavirus. So we wait for these dark pool prints, right? Now, you can see here all the way back at the bottom, there is a headline. This is December of 2018. December 26th, actually, Barron's headline was saying, you know what, the party is over for NASDAQ. It is done. I remember Christmas Eve, everyone was saying, oh, this market's going to go down. It's going to be awful. You know, maybe you guys need to just go ahead and take your profits. And then we saw 12.2 million in dark pool prints on the 24th. The 26th, we saw 26.9 million prints. And of course, we know what happened. The market rallied right on up. And now we're looking at January of 2020, right? You could start to see this curl over right here. Well, again, what do you think we saw up at the top? Yep, January 17th, 21 million shares at 330.85 roughly. 331.78, 331.80. Then again on the 20th, we saw more prints on the 21st. Many times, if there's going to be a very, very big move in the market, we will see 3 consecutive days of prints. When I talked about the bottom for December of 2018, it was 2 heavy days of prints. So on the top, we tend to see 3 in a row. On the bottom, it can be 2. It could be 1 massive one. It could be 2. And then we have a V shape. So it's different, but they tend to somewhat be the same. So why is it all pertinent? Well, you know what happened now after January 17th to the 21st? We had 51 million shares, roughly $16.9 billion. So do you guys have that $16.9 billion? I will honestly say I don't have $16.9 billion. But I will be happy to follow the guys that have this money because they're looking to make big profits. They're not looking for pennies, right? They're not looking for scalping. They're looking for those amazing swing trades, for a trend to go ahead. And these are the big guys that start that trend. These are the guys that go ahead and create the movement in the market with the placement of their orders. So what happened end of February 2020? Look at this, 55 million shares of the SPY, right? So we saw this coming. Now, where are we now? We just bounced pretty much. We almost went down to 298 today. Pre-market, it was roughly there, 298.98. So we were $1 away from 55 million where they were selling the end of February, right? And 311.56. Now these are old, right? These are old prints. Sometimes old prints will still sort of be a line in the sand, but it's much like if you go to the beach and you draw a line in the sand, it's good for a certain period of time until the tide comes in, washes it away, and then there's new fresh prints. So we were ready. We were so ready, and I was so frustrated because I went on vacation, and then when I came back, oh my goodness, I rocked it on vacation as well, but it was frustrating because I wasn't able to rock it as well as I wanted to. But I had some great swings on, I had some great puts, and really profited, paid for the vacation. So here we have what happened in end of 2019. And the SPY pulled back. We hit the 200 simple moving average, came up on the weekly. Again, we saw those prints in January and it pulled back. Then in February, and boom, we came all the way down here, right? Same thing over here. You can see it zoomed in a little bit. So we had these prints, we had a pullback, hit our 50 simple moving average. This blue line right here. And then we come up, yep, it stalls. Many times when you see price action like this, especially in the SPY, when we're just going sideways, they are laying the foundation for a big move. Most days it'll be up, down, up, down, up, down, up. Uh-oh, when we go sideways, pay attention. Not a good time to trade, but when we break out one way or the other, there's that move that will happen. What do? We saw and we were prepared. We went below that where is it back here? 311.56. That was on the 27th and 28th. Down here, 311.56. We saw those prints happening, right? And once it dropped below, well, is it buying when we're below it at that point? No, they're selling at that point. So we were 100% prepared for this move. And it was an amazing month, absolutely amazing. And that's what I want to try to help you guys with, is to be able to capitalize on these great moves, because these big guys that run their money through the dark pools are not looking for small movement, right? So what do we see on March 17th? Wow, look at that. Tons and tons, right? We're looking at 3.8, 2.5. I think I have it added up here. No, but March 17th was pretty much the bottom. We saw it happen, right? So when you get used to it, you start to see all of these prints. You can understand, all right, I see the print, but I need to be patient, right? I need to go ahead and lay out my trading plan. I need to see, all right, this is great. I have some great information. I've got these amazing prints. We get really excited when we see big prints because we know a big move is coming. That means that we are able to go ahead and map out the trade, right? Much like if you were going to go on a road trip. You're not going to just jump in your car. I'd say 85% of the people are probably going to potentially look at it, at least on Google Maps, before you go on a road trip, to know, okay, maybe what city are we going to go through? Maybe there's a great place to stop. Maybe you'll look up some restaurants. If it's a really long road trip, for example, maybe driving from Boston to Florida, right? You would want to say, okay, well, maybe we'll spend the night at this location, and maybe we'll go here for a great meal. Maybe we'll have crabs in Maryland, or you'll go for hush puppies in North Carolina. whatever it is, you might lay it out. I mean, I remember my parents going to AAA and getting the map and highlighting the route. That's what you want to do with your trading plan. You want to go ahead and lay out your map, either direction, right? How long would you go in the wrong direction on a road trip before you realize, hey, I'm going the wrong direction? Well, that's pretty much like getting into a trade and having it go against you. Uh-oh, you might be on the wrong side of the dark pool print. That means you've got the billions of dollars against you. Do you want to go against billions of dollars? No, I don't really want to. So you can easily get out and wait for it to be confirmed, or you can flip your position. So you want to pull up that daily chart to see where it is on the daily chart and mark your dark pool print on the chart, right? You don't have to, but I find that it makes it that much easier because you have this map that you are already setting out and you're making it clear. It's going to be simple at that point, right? You're going to see where is it going to go from here. Draw out your trend lines, potentially resistance and support as well. And note when the trends are broken. That is going to be a great time to go ahead and get into the trade when you have that dark pool print and you have a trend that is broken. It's like the cherry on top of an ice cream sundae, right? And what's even better is maybe you see, okay, maybe there's some seasonality as well, right? Those are the sprinkles on top. So for this example, we've got Facebook prints, right? This happened June 12th, so still fairly recent, right? That's 3 weeks ago, almost 2 weeks ago. So we don't pay attention. You can see we have these opening prints. We don't really care about the opening prints, right? Those are not important to us. But ones that happen like this, Form T simply means that it was outside of the normal trading hours. And then we have a regular one, right? So we can see that this was reported slightly outside of the market range for which it was trading. So this one was reported and we were trading higher already. And this one, 1.8 million, that's not a usual print for us to see on Facebook. Opening prints, maybe 270,000. Okay, that's normal. But 1.8 million is abnormal. We get used to seeing these prints every single day as well. And then once you start to see one that catches your eye that's abnormal, it's like, oh, okay, I need to pay attention to this because we don't see this size on usually Facebook, Microsoft, Apple, Amazon, Tesla, the really big names that have those large ranges, higher priced, large cap stocks don't usually get super large prints. So when we see them, we pay attention. So we have these prints, and let me see, I think we even had, I'm just going to look and see. I could pull it up and see. We actually had even more, but the market on close, we don't really pay attention to either. Yeah, those were the largest for that day. So we know, all right, 229.11, 229.12, round it up a little bit, and then 230.93. We'll round it up there as well. So we go ahead, and this is the daily chart for Facebook. I did pull it back so it's not all the way to today's date, just so you could see, you wouldn't be biased from today or yesterday. And I drew them on here with these dashed lines, right? So this was July 12th, right here. And I also did my homework. I drew some trend lines, right? Drew a trend line right here. Well, it looks like we're below this trend line, so maybe it was selling, right? And we have this area of resistance up at the top. So step one, go ahead, draw it out. Well, step one is wait for the prints. Step two, prepare that trading plan, right? We see, here we go, we've got this candle. Well, it came down, it hit our 21 EMA right here. And then we went ahead and we didn't close at the top, but very low risk right next to the averages, right? And we actually closed below the prints for this day. So I actually put on a swing trade to the downside. And was very happy. It was low risk because we were already in a downtrend, and I thought, well, we're below this, so I'm going to go ahead and put a small trade on, which performed very nicely. And that was over the weekend. So it was from a Friday to a Monday. Well, this Monday, then all of a sudden, much like today as a Monday, they went ahead and they took it up above. So I closed out my short at open, and then I went ahead and I bought calls. Actually, at the end of the day, or at the beginning of the day down here, I actually bought calls thinking, well, hey, if it goes up, I'm going to go ahead and jump on in because they're likely going to fill the gap back up. It's much like a rubber band effect, right? So when you're far away from the moving averages, like these candles right here, it goes up, and then what does it do? Oh, it pulls back like a rubber band or a magnet to the moving averages. It's riding it up a little bit, and then it pulls back, okay? Came to our 15 EMA here, and then we broke above, and we're off to the races again. Up, a little extended up here, opened really high, and pulled back. You can see here, pulled back as well. Then opened, went up, and then pulled back, right? So when you're looking at it, you want to try to, again, that second point is trying to enter low risk. Once you have definite direction from the prints. Now, in swing trading, you want to wait for the end of the day. You want to have as much data as possible. It's like people jumping forward potentially with a vaccine for COVID, right? You don't want them just to say, oh, well, we've had 1 month of trials and we've tested 10 people and it's been great. Is that really what you want in moving forward? No, you want to have that big picture. You want the full range of data. You want to have as much as possible. So if that testing period is 3 months and it's 1,000 people, you want all of that information to make that educated decision. Well, it's much like that with a swing trade. You don't want to get into a swing trade first thing in the morning necessarily, because that can hurt you because they can paint the candlestick whichever way they want to. You might end up in a doji day and you're down on your trade. Now, when you have the prints and it potentially pulls back, you could get in at the middle when you start to see a bounce, right? So when you're first entering though, you want to go ahead, you want to remain close to averages, right? So close to the averages, and you want to keep it simple. Bullish above or bearish below, right? You don't want to make it difficult. So we're looking at it. All right, we have our prints. This is the 12th. Then we have Monday, and it's bullish engulfing. We completely took out that candlestick, right? So we move forward. Here's our close up, right? We have our prints here. It pulls back, opens low right here by our 21 SMA. And then we go ahead and we engulf the candlestick and we close near the high, also right at the trend line and above the moving averages. So getting in here as a long, it's minimal risk, right? Our risk is back to the averages. You can see how here it was higher, pulled back, and then again sold off. What happened? Opened right at the averages for this day. The yellow is an inside candle. So it pulled back, then sold off, came down, buyers brought it back up, and then opened down here, fully engulfed it. So a lower risk entry because we're close to the high of the day and we're just above that trend line, but we're above the prints, right? Think of the billions of dollars. That was 2.5 times 230 times 1 million. That's $575 million roughly. I'm not going to go against that. So if it's above it here, then it's likely buying at that point. It came down, they played around with it, they took it down, they brought it back up, they took it down again, and then they take it back up. So that could be your low risk entry. Worst case, it could come back down here, back down to the averages down there. So went ahead and drew my line right here. Hey, if it goes above this and it closes above this candlestick, I'm going to be bullish, right? It's above the print, and we took out the day prior for which we had that high volume. Bearish below, I want to see it break below. Could go ahead and move that down a little bit more. So if it closes above here, our target is up to this resistance, right? Because it tested it here once, tested it here twice. So that's the ultimate target. If it breaks below, we're going to come down and we're going to aim for that 220, maybe even on down a little further, down to 216 to close the gap to the downside there. All right, so you're going to wait for that low risk entry. You want to look at that daily chart, right? Because you want to see where you are in relation to those moving averages. And you want to be able to go ahead and capitalize and profit off of these prints. And you want to do it in the least amount of risk possible, right? And you want to keep that trading plan in your mind. You could do a screenshot, you could write it down, whatever you need to do to keep that in your brain to go ahead and be profitable on it. And then enter close to those moving averages. As I said, it's always that snapback effect, much like a rubber band when you get far away. It's the almost the bell curve example. When you are far away at the outliers, it always wants to come back to that mean right in the middle, and that's the moving average. So if you can bring it right back to that 8 or 9 EMA, whichever you prefer better, that's going to be your lowest risk, right? So know that when it crosses, if you have the prints below, so if you had the prints below you, right here, just as it's crossing, it's still right there at the print level, but that's going to be a low risk entry, right? Because you're above it, you're above everything now, you're above the prints or the trades, and you're very close to the moving averages, and you've also had the crossover here of a faster moving average above a slower one. So it's an indication that it's starting to curl back up. Vice versa, if you'd come over here, well, there's not really a breakdown here, but if you'd gone short right here, right, close to the moving averages, and you have this trend line breaking down, we didn't have any prints up here, but if you'd had a print, say this yellow line was a print, and then all of a sudden you come and you're below the moving averages and below the trend line, guess what? You're going to have a higher probability of success, and it's going to be low risk because you're right there at the moving averages and the trend line breakdown. Okay, do you guys have any questions so far? Anybody? If you guys have questions, just put them in the chat and I'm happy to answer them. Okay, so we've got this broken down, right? You've got your low risk entry. You want to get in closer to the moving averages. Just check to make sure. No, okay. So you have your dark pool prints. Number one, again, prints. Lay your trading plan. Drew out some trend lines. I drew a little trend line here. That was from the bottom here and another candle that was way back here. And then all of a sudden we go above. All right, great. You know what? You want to be nimble. First I got in short. Hey, I made a nice profit. Well, you know what? I didn't wait. I didn't hesitate. When the market gives you a gift in the morning of a swing, go ahead and take at least a partial profit. You're never going to go broke when you're taking profits in the market, right? Especially with a swing trade. That first 15 minutes, it's crazy. It's volatile. All of the orders are stacked up from the night before, right? So when all those orders are stacked up and now the brokers are making money with order flow, they are looking to go ahead and try to execute as many of those orders as possible. So they will whip it around at open. So watch it and see. The first 15 minutes can be craziness, but that can be an amazing time to lock swing trade profits. If I had waited from here until the end of the day, well, guess what? All my profit would have disappeared, right? But I flipped it right here, and then I saw once we broke above this 21 EMA, to me that can also be a trend change indicator on a daily chart. So I thought, well, you know what, I'm going to get in low risk, and I got out literally right here at this yellow dot. I didn't let it, I was thinking, oh, they're just going to continue to sell it off. They're bouncing it up to sell it off. Well, that's where I got into trouble because I started thinking, right? If I'd stayed in that trade, I'd had a 235 put the next day, would have been amazing. But I got out. However, I still got back in at the end of the day because it gave me that indication that they were bullish on it. And I was jumping the gun, anticipating the move here. I didn't wait for confirmation. And that's why I was extra cautious and just took a small profit instead of letting it go and perform all day. Because with options, you can see that it will decay very, very quickly, especially if you're out of the money. So I was down here at 226 buying an option $9 away from where we were trading. And you can see now that you have the ability to profit buying out of the money calls and puts when there's going to be a massive move, because you know that these big guys are not looking for chump change. They're not looking for 25 cents, 50 cents move. They're looking for taking it from 26 all the way up to 239, a $14 move, right? Or roughly 5% of Facebook, right? So you can have amazing, amazing gains. Well, let's go forward. We have our trend lines, right? Excuse me, not our trend lines, support and resistance. Hey, if it goes above here, this is where that high volume was. We're going to be bullish above this point, right? If it goes down here, we're going to be bearish. While it's in the middle, where I had my trade, it's a no trade, right? So that's why I got out, because I didn't want to get burned on it. So I thought, I don't want my call to go to zero. I'm just going to go ahead and just sit here because I'm below the prints and I'm getting in long. Wait a second, I need to reassess this. So I got out with a small 20% profit on my call. And so then what happens? It closes above, you go ahead and you go long, right? No thinking. Keep it simple. Try to keep trading simple and methodical and computer driven as possible. Computers do not have emotions, so as traders, when we put our emotions into it, it makes it that much more difficult. So we go ahead, wait for the confirmation. If you guys have ever read Reminiscence of a Stock Operator, Jesse Livermore is talking about that high probability trade. Well, he would give people levels and say, you know, wouldn't you rather get in at this level where you have a higher probability of seeing the success than only having it go from here to get rejected and then come right back down again, right? Wait for that confirmation and then get in with as little risk as possible for the high probability trade. Again, this is the 45-minute chart blown up. So you can see this is where we had the prints, these lines right here, and it closed below. I went short, excuse me, it closed right here, but it still closed below. I went short, locked a profit right here. As it hit the trend line, bought a call, came up. I took my profits, I think, right around here. Not even in the first 45 minutes, I was out. And then it went ahead and it continued up. It crossed this trend line and it closed just close to the trend line, went ahead, went in long, and took profit up here, right? So you can see it will follow. Everybody always says, Jane, your chart's so busy with these trend lines, but the computers pick and choose which ones they want to bounce off of. So it bounced here, it bounced here, it bounced here, it bounced here, it bounced here. So that's why I have them on here, because many of the computers are written to buy and sell off of certain algorithms, excuse me, off of certain moving averages. So the algorithms go ahead and they will determine where to buy and sell. So if it stops and stalls on the 50 simple moving average, then guess what? You need to pay attention. Different stocks have different personalities and will correspond with different moving averages on the charts. Okay, so Mura says, when you buy calls, what strike price and how many days to expiration? Well, Mura, it's going to depend. There is no set number for it to be, okay, we get a print that's 1 million, so I'm going to go out 5 days and I'm going to buy $5 out of the money. You have to look and assess every single chart, right? So here was that line. our bullish above line, it closed above, we were above the 2 prints, no thinking, right? Go forward. And we're not looking for particular delta when we are going to purchase the calls or the puts, because we're just looking at targets, right? So right here, if it closes, well, guess what? Maybe I could buy a 240 as my target, right? We see, or 239. We see that this has acted as resistance in the past. There's a good chance that it could act as resistance in the future. And maybe that 240 would be a little bit better, because people in their minds naturally will go to a round number, or they'll go to a $5 range, or if we did 237.50, that $2.50 increment. So you have to think of what is going to be also a popular number to get in and out. And you're also looking, not every single print that we get will be a great trade with options, because there might not be good pricing on the options. There might not be weekly options. We prefer weekly options because it's easier to get in and out. If something only has monthly options and it's a 5-cent spread, or something like Tesla where you can have $1, $2 spread, that can make it harder to profit. You can still get a great move, but also it's many times easier for those options to be manipulated with someone propping them up or pushing the price down. And so you also want to map out your trade with looking at option chains if you do trade options. Otherwise, you can look at the chart and you can say, okay, we broke the trend line, and if you've gotten in the last 15 minutes, it was right above, you could go ahead and get in and then capitalize on that nice move up overnight. Now, there's no guarantee that when you have a print right here, that the next day is going to be a massive move. Sometimes it takes a week, sometimes it takes 2 weeks, sometimes it takes 3 months. So depending on the size of the option, the best thing you can do, size of the print, the best thing you can do is buy time, because that move does not always happen in the next 5 days. It could happen in 2 weeks. Again, it could happen in 3 months, right? So you enter here and then exit here. Then I got back in down here when it hit the 200 simple moving average on the 45-minute chart. I was able to exit up here. This yellow line, yes, this is another print. We did have another smaller print. It was smaller, only about 250,000, but I took note of it right at open. And I thought, you know what, I'm not messing around. I'm locking this profit, because we're right here at this resistance line. And even though they could take it up, I'm going to go ahead and lock that profit. So you could have easily had 2 good trades, or you could have stayed in it from here all the way up to here. All right. So you want to monitor it at open. Like I said with that chart, you want to take those partial profits at the targets and leave that last 25% to the end of the trend, right? So if you've gotten in here and you took 50% off, you could have added back here, or you could take another 25% off when it goes back up above here, or you take, 25% off here, so you're 75% out. And then you go ahead and you leave that last 25%. If you're in options, you could roll it out with further time, saying, hey, maybe I'm going to go ahead and be able to go ahead and make a larger profit on it. Maybe it's going to go ahead and continue on up further. And sure enough, if you did, the next 2 days, it was up here at 244. And then we had the big sell-off move to the downside for Facebook. But you can go ahead and always set your option back at your original entry price. Take some off the table. Again, when you scale, it's also going to help you to prevent yourself from limiting your profits. Or another option, if you guys trade options and you want to do the prints, trade the prints, is you could go ahead and you could buy small risk option and call, and then you add to the side that's the winner, right? So maybe if you bought a call here and a put here, you could have closed it out, wait to see the end of the day, or close out half of it right here, wait to see the end of the day. Oh, it goes all the way up. You don't necessarily need to close this out. If you go out 3 weeks, that was June 12th, well, you would still have another week left, and you might be profiting profiting, excuse me, on a 220 put at this point, because now 3 weeks later, we are below these prints right here. We're below this 2.5 million. So you can see that you can profit on both sides at the same time. It could have a 1 day move opposite direction and then they take it up, or they could have been taking it up just to sell even more and then they dropped it down below. So you want to pay attention and just be nimble. If you're on the wrong side, get out. You know, try to lock profits as best as you can, because that's how you're going to go ahead and be able to roll it and just profit all along the way with these prints. All right, so again, we have that trend line. The targets got in, took the target up there, got it pulled back, got back in, and rode it up for that second wave again. So you guys are probably wondering, Jane, that's great. I love the dark pools. Now, I really want to follow these guys that have billions of dollars, but I don't know, how can I do it, right? Well, I teach twice a week in the training pit, and that's where we really help people to learn about the dark pools. We have traders that have years of experience that want to reset around the dark pool prints, or we also have brand new traders. So it is a teaching room that really helps to teach people all about trading. Many things that others don't necessarily talk about as well, like what's your contingency plan if your power goes out? You know, how many people will teach you things outside of trading that can make you be the best trader possible? And if you feel like, Jane, that's great, but I really want to do self-study with prints, well, there's the Dark Pools app that you can get the prints on your phone as well. But you also really need to have practice with it, and definitely paper trade, because you're going to see you might get in too soon, you might get out too soon, you might not have enough patience. And the more time that you see it over and over again, the more consistent you will be in profiting with the dark pool prints, and you'll understand the methodology to them. If you are interested in doing the dark pool boot camp, that is going to be a 2-week 70-hour training. So the first week, it's actually coming up August 3rd. It's going to be 35 hours the first week dedicated to day trading. And then the second week is dedicated to swing trading. The reason why both are taught is because knowing the day trading aspect can make you be an even better swing trader. Because when those profits are there, you know the best time to lock them in. You know when it is hitting a resistance point, that you have the profit targets and you're able to go ahead and lock the profits in. And then finally is the Java pit. That's where you'll find me pretty much every single trading day in there sharing. We all call out different levels for different stocks. We have, you know, whispers that we do every single day that Stephanie creates every day, and we trade them. And so we've got different teams of people. Hey, guess what? Apple went above a bullish above level today. Let's go ahead and jump in. All right, it's hitting the first target. Watch out. You know, maybe you go ahead and take a little profit. So we're all looking as a joint effort to help everybody profit. And that's what the goal of the training pit is, to try to help you guys to learn about trading around the dark pool and be the best trader that you could be. Are there any questions? I see I have the chat up. Do you guys have any other questions? I don't want to eat into the next presenter's time. And that's also, if you guys have any questions too that we don't get to, you can also email me at jane@cjanetrade.com or jane@thedarkpools.com as well. I'd like to thank you guys for joining me for today. And David, if there's I imagine you have your next presenter that's coming. Is it there? Happy to help. The way I see it is it's all of us retail traders against the really big guys and the algorithms. And there's more than enough money in the market for us to all profit. So when we all work together, we can really profit with some amazing profits. And there's no egos, no, hey, I did better than this person. We all work together to help everybody profit. And that's the name of the game, right? Go ahead and lock those profits. Carpe profit. All right. Thank you, David. And thank you, Anka.
Thank you, Jane.
For having me.
Thanks, Jane. Yeah, great presentation. Thank you.
Yeah, thank you so much for joining us. And please say hi to Stephanie.
I will do. We'll have to get together. We'll have to do a women's one soon.
Yeah, definitely. David.
Yeah. Well, we're gonna do the women's event again in March, so planning on that at least.
Awesome.
But,
Great.
we'll see what we can do before then as well.
Sounds great. I look forward to it. And thank you all again. And if you ever have questions, I'm here. I'm accessible. And thank you again, Anka and Dave.